Yo, folks, what is cracking, man? Just trying to figure this one out. And I guess right now I'm going live for the first time, just testing this out. You know, what's cracking, folks? I'm the Credit Savage, and I'm basically here to talk about, um, credit cards and credit card bonuses that they give you when you meet the minimum spend, so that then you can hit a promo and use those points for free hotel stays, airfare, and even gifts. So, obviously, I talk about finance and how to best be able to use your resources and get the most out of it. I talked once in a while about stocks here and there. I will be sharing five stocks that I have um, kind of like on my site, and that's pretty much it. I'm just going live here right now. I'm not looking to have that many viewers, if any at all, but sure enough, I am here, and I'm just trying to test this out so that I can speak about the coming up trading week and see how we can make a little more money. It's an exciting next week because I think it's going to be the beginning of earnings season um, kind of soon. And so I think it's time to start positioning yourselves so that you can have a portfolio that's kind of balanced, but yet able to make the most out of whatever position you are in. And so the stock market is quite cyclical, and I think it's kind of adjusting itself right now and trying to find a niche. And so that's what we're here for, and trying to figure out how we can make money, by either using a little leverage or taking money that we have, and instead of using banks and have them make most of the money um, with your resources, you're now basically managing your own assets and making a pretty penny while at it. Why not? And so that's kind of the gist of what I'm going to be talking about today. I'm probably going to be live for like 30 minutes, 45 minutes, and like I said, I'm trying to figure out this live situation because I've never gone live before. I think like once, kind of like to test it out. Um, but my channel then was kind of geared towards just credit cards and was starting to veer towards stocks. However, I ended up getting sick. My kids ended up getting very sick. Um, I was trying to figure out, a situation where it would work for me to maybe stay at home, and so I took, a bit of time off. Now, taking time off again, and so it is possible to make a living trading stocks. My wife is the one that kind of works the 9 to 5, and I'm just basically managing both our portfolios. For those that are thinking about managing your significant other's portfolio, I say first ask their permission. Definitely ask the permission. Don't just go on and manage their portfolio, because that's not how it works. If you incur a loss and that person is not aware, they may come back and get really angry at you. So I suggest you having a good conversation. And if you're quite savvy about how to use your stocks as a leverage to your advantage so that you can make money for not selling, because essentially that's what I like to do, is just promising to sell my securities and not doing so. I just go off on time and make money that way. So anyhow, let me see here if there is uh, some chat going on. I see a couple of people here. So if there's any questions, um, maybe you guys like to ask it. It's all good. But let me just figure it out here and see how this is going. Bear with me because I'm just trying to make the best of a situation that I've never been in before. So, anyhow, um, would like to talk about 5 stocks that I actually have a position on where I see that there's a lot of room for growth. I figured, why um, why start talking about um, the stock market when it's all hot? I think that most of the money is made now when the stock market is actually in flux and with potential to and or room to go down even further. This is when you load up. I have been bullish on several companies, and I actually made some really good decisions 2 years ago, and I started kind of buying into these companies that I saw were the future, and I think they're paying out now. There was one that I made a call and I didn't see it going under, and it did go under, which is FRC. It was local bank from San Francisco, which headquarters were in San Francisco, and it went under. I made quite a bit of money because I sell covered calls, and I ended up buying puts on it and selling puts, and I moved around with it a lot. I did on the way down make money, on the way up made money, but couple of people that I know from Discord, went in kind of heavy, and they decided to go in on FRC, and made it was a bad play. It was a bad play. Luckily, I made some other calls with artificial intelligence, made some other calls with SoFi, and those have panned out. So that's what the stock market is. Not every stock you choose is going to be a home run. That's just not the way it works. Sometimes um, a company, is trying their best, and it just for whatever reasons, it goes under, and so it just nature of the beast. You will lose money in that sense, but you can always use it as a tax write-off. So that's kind of what I'm going to do with FRC. I know a few other people that invested on it and are probably going to use it kind of to offset a lot of gains from AI, SoFi, ChargePoint, um, Tesla. There's a lot of really good companies that have run up maybe 100%, maybe 200% in the last 3 months. So that's exciting, and I'm looking forward to doing these videos a little more often, where people kind of come into this channel and want to talk a little more about investing and get ready for the coming up Investor Week. I am a product of the Uncle Bruce channel. I kind of take him as my mentor. I've had one-on-ones with him. I've written him. I'm always on his channel because I honestly think for the novice trader, somebody that's just beginning um, to get their foot in the water, so to speak, and they want to learn how to navigate the market, Uncle Bruce's channel is your diamond. I completely and 100% um, would gear somebody that's learning about the stock market to go to Uncle Bruce's channel and learn the basics, because he can explain to you how Wall Street works in plain English and in a very elementary way. I know that there's a lot of people that are a lot more seasoned, and that's kind of what I'm gearing towards, is people that have an idea on how, selling a put works, how a covered call works, what a leap is. I don't know if in the future maybe I'll come down and talk a little more about the novice aspects of the of trading. But as of right now, as you can see, I don't even have the right tripod, because my daughter, who makes TikTok videos, took it and has no idea where she put it. So this was just a spur of the moment, because I'm excited about the coming up trading week, and I'm a part of a Discord that we're always chatting on what's going on, and what's going to be the plan for the next week. And so I figured, Uncle Bruce used to do his show 2-3 times a day, and then he cut back to only the morning show, and I believe the Wednesday show as well. But it's kind of one of those that you have to have a membership, and not everybody wants to spend $40, because you'll have to pay $15 for YouTube, and then 25 for Uncle Bruce's channel, to be able to watch this. So I understand. Um, So that's kind of why I'm doing this. I figured on Sundays I'm gonna make a video, kind of to get us, the Uncle Bruce family, and those new ones that want to come in and kind of follow the credit savage of Wall Street, and make some money, man. Because that's ultimately why we're here and why we invest, is to make a crap load of money and set ourselves up for the future, and use money that we have to generate passive income, because that's what it's all about. It's generating passive income, with the promise of selling stock you already own. And perhaps I'm going to explain a little bit how this works. But like I said, I would definitely recommend those that are very new to the market to go into Uncle Bruce's channel and look up my old man, because he really does have a really good idea on how the stock market works, because he's been doing it for 40 years. Um, as well as, he had his own company, and he traded in the stock market up in Canada, and is very knowledgeable about how the stock market works and how it fluctuates. And that's one of the things that I got from his channel, is kind of learn patience, and and how to kind of how to see uh, how to see stock movements, and stop worrying about where the stock is going, and kind of pinpoint where the stock is at. Like, stop guessing, and start making money either on the way up or the way down. And that's how you make money in the stock market. It's by having patience, which is first and foremost, and having an idea, a plan on how you're going to tackle trading. And anyhow, I'll also probably talk about a couple of credit cards that I'm looking at, that I think would be good for people that have asked me on the Discord. What credit card is best right now for traveling, because they want to travel in a couple of months. That's kind of not how it works. You want to get a good credit card that you can use for whatever it is that payments that you may have coming up, and just use them as you would cash or a debit card. That's like that's the advice I would give you. And the ones that I would recommend, honestly, is the American Express Platinum, because it's got a really big promo right now. That's if you're gonna use hotels um, and airlines. And someone asked me for a hotel credit card, and I think the best credit card overall, just in the game in general, is the Hilton Honors Aspire. Um, I'm probably gonna put a couple of links down here so that you could, if interested, learn more about those credit cards. But they do come up with a fee, which is an annual fee that they have. However, it pays for itself on the first year. After the first year, you can kind of see how much you used it, how much you got out of it, and if you like it. And you can always cancel. There's no big deal. And I know that if you are not going to buy a car in the next few months or a house, um, use your FICO to your advantage. Ultimately, that's what this is about. Is using your assets and everything you've had up to this point to generate income for you and make your life easier. That's just basically what I'm about. I just took a trip somewhere, paid nothing for it. I'm going back to Hawaii um, in December because I have a ridiculous amount of points, and I will not pay for a hotel or airfare when I get there. So um, that's pretty much as far as credit cards. If you have any questions, just let me know, and I'd love to answer them. But as of right now, let's talk about the five stocks that I think that personally I own. So there's a disclosure right there. Also, this is not. I'm not trying to give anyone. I guess advice on how to manage your portfolios. This is just information that's out there. So I just want to make that clear. The stock market is forward looking, yes, but past performance is not going to dictate future performance. So you have to have that mindset very clear when you're investing. Um, and so, also keep in mind that any company you invest, you should be um, excited to hold for at least 5 years, and that's the main key point. That if anything you take away from this is that any company you're going to invest in, make sure is for at least 5 years, and it's a company that you don't mind holding. It's a company that you use every day or have used and you like it. Um, Company number one that I like to talk about is SoFi Technologies. Ticker is SOFI. Very bullish on that company since I had it ever since it was a SPAC. I invested on it when it was $11, and then ran up 11, 14, 15, 18, and I just kept adding. And then it took a nosedive, so I made money on the way down by selling covered calls, and I've been just making money on it for a couple of years now since it went from a SPAC and merged to become SoFi. Um, it's one of Uncle Bruce's 10 original SPACs. It's still way below what it should be, but it's going to take a while to get up there. However, earnings are coming up, and I'm very excited. So I bought some October option calls, and I'm getting ready to add some more this week. If there's a dip to the sevens, right now I think it's like 810, something like that. If there's a dip, to like 790, 775 or below, I'm gonna load up on it. And then if it gets to like the 715, 730 area, I'm definitely gonna buy more. And if it goes to the sixes, you best believe I'm going to buy a nice chunk because I have quite a bit of SoFi. Anybody that's on the Discord knows just how many, and there's people that I know that have several hundred thousands of shares, and they're just ready. The other stock I would like to talk about is Lucid Technologies. It's kind of a rival to Tesla. I like it because I see that there's a future there. Um, it's heavily financed by Saudi Arabian money, so I think that's going to be um, one of those companies that it's just not going to go under because they won't let it. And because they have a lot of infrastructure at this point where it is expensive to make their car, and I guess that they've had issues kind of getting their cars out there. But they're moving their company to China, which is going to make a crap load of money for them because they're going to save millions and millions on labor. They're going to save a lot on transportation. And that's kind of the focal point in what's been hindering Lucid Technologies, LCID, that's the ticker, that they just can't make their cars fast enough to get them out into people that have already prepaid for them. They have a back order, they have a backlog. So they just can't get the cars fast enough because the product is in flux or there's issues, transporting it, and it's just taking too long. So they just decided to make the move just like Tesla did to China, and I think in the next year we're definitely gonna see a revamping of it, and it's going to once it goes, it's going to go. So I said at this point I'm just loading up, and that's one of the companies that I recommend. The third company is a sweetheart of mine because I got it 2 years ago, and it was C3.ai. Ticker is AI. People from the Discord that know me know that it's a really good company because of the volatility aspect of it, and you can make a ton of money. I loaded up when it was in the 11, 12, 13 dollars area, and I loaded up again in the 20s. I sold some covered calls. They're about to expire, I think July 21st, so I'm going to roll. Anybody that is, trading and has been trading for a while knows what a roll is. And so I'm going to look to roll those over to perhaps 2024 and or take a big chunk of change for rolling to 2025 at this point because I'm within, what I pay for. My average, my cost average is like $19 right now. So I'm totally content taking $30, $40 per share and then taking $10 off the table right now. Just in case there's a pullback, which I'm thinking there may be in the future, since there's just too many variables that are going against the market right now. I know that because of where we have been, people are just itchy to have good news, and any news is good news, I guess, for anyone, even if a company, and this is something that I've talked about with people in the Discord, that they say, well, this company's exceeded expectations, and that's what they're telling you. Their companies are exceeding expectations. What does that mean? Well, let me just put it to you like this. I was looking to lose $3 billion, but I only lost $2.5 billion. I'm still making no money, and I'm still 2.5 billion in the hole, but I exceeded expectations. So I'm gonna spin that as a positive when I release anything to the media. And so that's what companies are doing. They're actually losing money. Most companies are losing a vast amount of money, but they're masquerading it as exceeding expectations, because that's one thing that keeps the investors from pulling out all of their money. And so I think we're going to have a little downturn, especially when the rates go up. I'm thinking we're probably going to increase rates two more times. Probably in July, we're going to increase maybe 25 basis points. And I'm looking at November. I don't think we're going to do anything in December because I don't think Jerome Powell is stupid enough to raise 25 basis points for Christmas. That would just be a slap in the face. That would make people angry at Joe Biden, although Joe Biden had nothing to do with Fed Powell, Jerome Powell, sorry. And so it's an election year coming up. I think that this hit's going to be in November and July. Anyhow, that's another company, C3.ai. It's probably going to run to the $100 area in the next in the future. It's probably going to go $200, $300. It's already been to the $175 area, and that's where you're going to make your money, because right now it is still a buy. To me, I've been buying it since I think the first time I took a position on it was $28 2 years ago. and then I sold covered calls. It went down to the 20s. I bought more, sold more covered calls. It went down to like the 17 area. I bought more. It went down to 12s, and I loaded up. I loaded up, and then I've been loading and loading and loading. I um, sold some puts, and then to collect that money, I buy some options, collect that money. So I make money on the way down, on the way up, and that's kind of the gist of being in the stock market is not getting flustered when something negative happens in the market. Is having the iron stomach to say I'm going to dollar cost average on these stocks that I'm bullish on, because that's why I tell people, if you're going to invest, make sure you invest on stocks that you're going to be willing to hold up to 5 years. And that's why I see myself holding SoFi until it's $100 a share, Lucid until it's $150, $200 a share, C3.ai until it's like $300 a share. Company number 4 that I am bullish on, and this is because of the EV legislation passed and how all the infrastructure is happening, uh, and because they own more than 70% of all the EV charging stations in the United States, and that's what I mean by they're going to make a killing. Right now, they're just setting stuff up. Um, it's ChargePoint. Company number 4 is ChargePoint, and the ticker is CHPT. Um, right now, they're, I think, in the $8 area. I've been loading up right now. Anything below $20 is a gift. So I've been loading up in the eights, loading up in the nines. And so I myself have sold covered calls for 2024, some $15 calls that I was able to take $1 in. So, I pay $8 for a stock, and then I get $1 back um, for the promise to sell somebody stock that I bought for $8 for $15 in January. So I don't know. That's almost a 100% return on my investment. If somebody wants to take me out at $15, please do it. In January, I'll worry about buying wherever the stock is at, and then rearranging my portfolio. So, as you can see, that to me is a home run, because you can go around the bases, basically, doubling your money. And I think that's why we're all here. If you bought SoFi at 450, you've almost doubled your money. If you sold when it was in the tens or nines, or sold some covered calls, say 750s, $8, even $10 for 2024, you already got $2-3 back. So it's just, to me, insane how the game works. But that's the way that it's played. That's how you make money in the stock market. It's by taking stock, like I said at the beginning, that you have, and promising to sell it at a certain point when the stock runs up. And that's another key point, is only sell covered calls when there's a big spike on your stock, because the stock is not just going to go up, 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 and up, and up, and up, and forever go up. It's just not that's not the way it works. It's there's only one Tesla, and even then you can roll your call over, and then just get more money if you do sell at the end. So what's wrong with those trades? Absolutely nothing. Absolutely nothing. The name of the game is to make money. As long as you're making money, that's what matters. I see a comment here. Hello, Uncle Blue's follower for a couple of years. Wanted to check in and hear about your approaches and try and continue to learn in the option strategies. Thank you for doing it, Michael G. Michael G, thank you, brother. You're my first comment. I appreciate that. Give me a thumbs up if you like the content. And hopefully I'll do this next weekend on Sunday, so that we can talk about the coming up week. I'm very excited for this next week because, earning season's coming up, which means what? which means a lot of stocks are gonna go up, and on those that premise that says, buy the rumor, sell the news type of thing. Um, and so I think a lot of stocks are gonna go up, and right before earnings probably go down. And so I recommend that's something that you all do is take stock that you have. If it runs up, you can mitigate losses by selling covered calls on it. Or you could do nothing and see what the earnings are. If you're extremely bullish and you know a lot about that company, and you're able to just go through the nitty gritty and are extremely positive that they're going to have great news and the stock is going to fly after they have their earnings, then you can sell covered calls a day or two or three after that, because the stock's going to get bought up, and then it's going to probably people are going to take profit, and that's where you make your money. You're going to try to sell at the top. Really tricky to know when that is, but my advice is, if you're making at least $1 or two on an option per share, that's good investment. That's a good investment if you're making that much on a covered call. Some people like to trade weekly covered calls. Um, I don't like to do that just because there's so much going on in my life. I have three small children, so they require a lot of time out of me. And it's hard to watch the market like, minute for minute, like a lot of people that I know that trade for a living do. And so I'm a little more laid back in that aspect. I trade monthly, and so I like to take that approach. Sometimes I take 3 or 4 months out, and then that's when I sell covered calls. That's the beauty about having a lot of stock too. So if you have a stock that you like, you have several hundred shares, you can sell an option call for like a week, another one for a month, another one for a year, whatever, whatever floats your boat. That's the beauty of having the option to sell covered calls. Is it's your money, it is your leverage, and you can use it as you see fit. That's all up to you. I know people that don't sell anything. They don't sell covered calls. They just hold their stock, and then once in a while they're gonna have a purchase of, like, I don't know, a car, or they're gonna go on like this big trip, and they want to make 20, 30,000 quick dollars. There it is, done. We have a guy or a couple of guys on the Discord, Beach Boy, who trades hundreds of contracts. You know, uh, Sometimes in a month, sometimes in weeks. It's all up to him, and he makes a lot of money, a lot of money doing so. And so, if that's the route you want to take, do it. Make your money however it is that you want to make it, but have a plan. Have a plan, and try not to go back on it. That's another thing. You can't be wishy washy when it comes to the stock market. You have to have a vision, you have to have a plan, and you got to stick to it. And so that's the advice I can give you as far as that. We have one more company that I'd like to talk about, that I see is it definitely has a future. It's just been beaten down so much right now because there was a lot of speculation on it, and people didn't really know, what the company is about. It was one of those that the stock market got real hot, and people thought, stocks only go up, so they heavily invested on this. Um, then they had, I think, a couple of bad quarters, and people just lost it and sold. I know there was probably a lot of margin calls that went on, and they were able. No company was safe in the last 2 years. No company, but this company, I like, because it has to do with electric vehicles, as well as the infrastructure of it, not just the charging stations, but just like a lot more that goes on with that aspect of electric vehicles. And it's Ideanomics. The ticker is IDEX. Now, full disclosure, I do have 10,000 shares or more of it. So I was able to average down, and I think my average right now is in 9 cents or something. It is a penny stock, um, but but they're one good news away from going to the dollar land. So if you have a couple of $100 lying around and you want like a lottery ticket, that's my lottery ticket. That's what I call it. Um, is Why not buy Ideanomics? Buy 1,000 shares right now. I think it's like 9 cents, 8 cents. Get $80. Buy 1,000 shares. Leave them alone. In 5 years, come back, see where it's at. It could be one of those things that you're like, hey, you tried, didn't work, didn't make $1 million. But what if this company goes to like say $3, $4 in that time? Well, $10,000. I mean 10,000 shares. Um, and you have and it goes to $4. That's $40,000. You have 1,000 shares. You paid $80, and you get $1,000 back. You know, um, it's not a bad investment at all. Anyhow, $4,000 back. It's not a bad investment at all. So why not? That's kind of like I said, my dark horse, and those are my five stocks um, that I am looking at. I'm probably gonna talk about a couple of other stocks here and there, but for the most part, these are like the five stocks um, that I like, at least for this live that I'm going on, and I talked about the credit cards, the platinum, and the Aspire will be it. And I'm very excited about next week. Beginning of earnings seasons. I know artificial intelligence AI has earnings coming up, and it's going to make a lot of people happy. I think it's going to make a lot of people happy. I'm going to buy back my covered calls, and I'm not going to do anything. I'm just going to wait for them to have their earnings, say whatever it is they're going to say, and either it's going to be one of those where it's going to jump to $100, maybe anywhere from 60 to 80, 90, $100, or it's going to come down to 20. Either way, I'm okay with that because my average is so low that I'm okay taking that hit, and I've already made money with covered calls on the way up. Also made it on the way down, and now it's up again. So now I sold some puts when it wasn't like the 45 land, $44 land. I got some $30 puts for January, I believe. My wife as well. So we got, I think, average like $11, $12 for those cash secure puts, that we sold. And it's as soon as it went to like the $44, $43 land, I saw some weakness. I bought some puts this last week, and they paid out. A couple of people in the Discord that follow, that I'm there with, they bought some puts as well, made a couple of dollars. So that's what it's about. Don't fall in love with any stock. Don't I don't know. I talk to a lot of people at work and just in daily life, and they say, I love that stock. What if I lose my stock? I like my stock. I want to keep my shares and all that. And you're falling in love with a stock. You don't want to do that. You want to like a company, but the reason why you like them is to make money, right? So, say, for example, I sell SoFi calls, $15, $10 SoFi calls for January, right? And people give me, I don't know, $12,000 to sell them 100 contracts. Great. My average is like in the eights. So, right below actually. So to me is, um, I'm selling a stock that's averaging $8. I sell it for $15, 12.50, and they're giving me, $3 a share. That's insane for such a little stock. That's not. That's where the volatility aspects come in, and that's why when you starting to trade, that's when you do push. Cash secure puts and in covered calls, you want to look at the open interest. and the volatility aspects of it. I don't say I don't dwell too much on the Greeks, because quite honestly, maybe the delta, but honestly, it's just, as long as you have a good idea of how the company's working, they're giving you a nice profit. There's a high open interest, right? You should make quite a bit, quite a bit of money with the volatility. So, SoFi earnings are coming up, I believe, in late July. I thought it was August 1st, but I guess I was wrong. Either way, July 30th or 31st is when they're going to have their earnings. I expect some really good news from SoFi. So I've been loading up on some October option calls, the $10 ones. I think they're going to have good news. I'm looking to at least double my money. And I think Lucid earnings as well. Lucid is going to have some good news. Um, I think that, well, it's going to be a mixed bag. It's probably going to be one of those where the news are going to be sweet and sour. They're going to have good news in aspects of them moving their companies to, or headquarters to China, and working in the infrastructure, being able to have, more real estate to work with. They're going to have more labor, cheaper parts, but I don't think they've met expectations as far as deploying their cars to investors or to people that are expecting those cars. I think right now they're short. I don't know the numbers. Last I heard, they were like at least 50% short. If they're anywhere near the 50% mark, I think that the stock is going to take a tumble. I've already on this. I think it ran to like $9 a bit ago. I sold some $15 covered calls, or $10. It's one of those, and I was able to get a couple of dollars per share, and I'm happy with that transaction because I waited for a lot of movement in the stock, and then it backtracked. So, I'm looking to buy those cover calls pretty soon, and I'm probably going to sell some cover calls right before earnings, perhaps some tens, and try to mitigate that movement to the bottom that way. If it goes, you know, to $5 land, I'm gonna load up. I'm gonna load up because right now my average, I think it's $7. Um, I think it's $7. So I really want to get my average down to, if it goes to five, I'd like to get my average down to six. If it goes to four, I'd like to get my average down to five. That's great, because I think that's gonna be the 52-week low, and if they have one quarter, that's all they need. One positive quarter to make people have FOMO. Once that FOMO kicks in, I'm looking at Lucid to go to $20 land, $25 land. It's not like Lucid has not been to $70, $80 land. It's done it before. It is a rival to Tesla. High-end cars. Think Maserati. That's kind of what you have to give yourself. Also, is you have to give yourself a visual on the companies you hold, who their direct competitors are, right? And so, and what do they do different? And that's why I like Lucid, because they are a direct competitor to Tesla, but they're not trying to market to the $30,000 car uh, crowd. They're looking at high income earners, right? Or Henrys, high earners, not rich yet. And I think that's kind of the niche they're going for. That's what they have. That's what they're gearing towards. And I like them. I like the company. I like the stock. I like the fact that the CEO and founder used to work for Tesla, and ended up jumping ship because he just had better ideas on um, how to go about making an EV, and I like that. You know, there's several other reasons why I like Lucid, but like I said, I'm just at this point trying to load up. I see some more weakness in the market. Thank you. California, baby. I see more weakness in the market, and I'm kind of getting myself ready and having some cash on the sidelines. So that if there is any weakness, and there will be in the market, I can go and swoop up some more stock. At this point, like I said, my goal was to have 10,000 SoFi shares. My goal is to have 10,000 Matterport shares. Those that know me know that I follow Matterport. It's a company that I hold. Couple of thousand Lucids for sure. I have over 10,000 Ideonomics. Um, Several thousand AI would be nice. And then in 10 years, walk away. Hopefully from working. At all. Because right now I work when I'm able to. Since I have, like I said, three little ones, it's hard to get um, someone to watch them, and I don't like to pay, $4,000, $5,000 a month for childcare, since I can take care of them a lot better. And my job has, my job that I take has to make sense. It has to give me more money than I'm saving. So yeah, that's pretty much the gist of it. Thank you for watching me. I'm looking forward to doing these a lot more in the future, and I look forward to your questions or comments. And let's make some money, man. That's ultimately why we're here. That's ultimately why we all, I guess, went into Uncle Bruce's channel to figure out, how this stock market thing worked. Um, uh, GME, that's another company that we hold, and I say little weakness is coming about. Um, no shame in selling covered call right now for January and taking $4 or $5 for it. I just don't see GME having like a monster quarter. Um, and I'm probably not gonna be talking about GME as much as Uncle Bruce does. I'm probably gonna talk more about like stocks that I hold, and that's another reason why I wanted to make this channel. Is just I feel that stocks that I've acquired over the last 10 years are kind of stocks that we need to talk about more. Yes, AI is great. Yes, Tesla is great, and they're making money. But man, there's a ton of stocks out there that are making a ridiculous killing. And I know that there's some people that are very in tune and comfortable trading, AI and Tesla. Um, but there's other stocks out there, guys. Those that are in the Discord with me know um, Unity is a baby. Unity is a great company. It's high volatility. There's so many companies I'm going to talk about in the future, man. And I just so you know, in the interest of full disclosure, the companies that I'm going to talk about are going to be usually stocks that I hold. And so make of that what you will. I'm not being a fanboy here. I'm guessing that if anything, I'm making kind of like a live diary of how I invest, and would like some people to follow me in the process, man, because I think that a lot of people that are going to follow me are going to be those that are trying to get off the hamster wheel, like Uncle Bruce says. Start putting that chunk of change away, and instead of putting it away on a bank, uh, they're going to start putting it on some stock that they are positive in, and so use that money instead of getting 1% from the bank, and have them sell covered calls to make trillions of dollars with your money. Um, make a 50% return on your money. Why not? I know people that are making 100% return on the money that they invested in the last year. And that's the name of the game. You invest $20,000, $30,000 last year, you have $50,000, $60,000 this year. That's a win. There is no bank in the world that is going to give you that type of return as investing your own money. You know, people that have hedge funds that invest for you, I think that's the silliest thing ever. Interest of full disclosure, I used to actually work uh, an intern for a money management firm, and to me, I used to see the prospectus in the companies that or universities that had accounts with that company, and holy crap, it's billions of dollars. They were getting 8, 10% returns. And I'm just like, okay, if you have $1 million and you get 8% return, that's $80,000. That's great. I don't think that's anything wrong with that. That is actually a conservative approach. But the same approach you're taking, which is selling covered calls and selling puts, it's going to be the same approach there. You're going to make 50% back on that money. That's now you're going to be at $1.5 million. So I think that's awesome. Um, Anyhow, that's just kind of like, we're just scratching the surface at this point. Um, Very excited to come back again on my channel and make another video since I used to make videos very often during the pandemic, but then we had kid number three, and there's a big jump between having kid number two and kid number three, um, especially because it's a boy and kind of like a precocious boy, and he just gets in trouble and wants to touch everything. We need to be alert 24/7 with him because he's a handful. Actually, both of my boys are, and obviously my princess, the eldest, my girl, she's very high maintenance, so she always requires attention as well because she gets angry or she gets very sad if the boys are the only ones getting attention. And so, but I do look forward to making at least one video a week, um, and perhaps maybe a video during like earnings for some of the companies that I hold, and we're gonna follow. I see Rebecca Towns. Today's your birthday. Happy birthday, Rebecca. I think July is a fine month to have a birthday. I'm also going to have a birthday in a few weeks, and I'm looking forward to taking some time off and going to the casinos. Perhaps have a few drinks and perhaps gamble some money. And this is the beautiful thing. I'm actually going to take money that I'm actually making on puts and covered calls right now. I'm the trick is the money that you make with selling covered calls, with selling cash secured puts, or selling puts and then or buying puts and then selling them. Always buy more stock with that. Always buy more stock with the money that you generate. At least a 50% amount of that, and then the other 50% you can pay bills with. You can do whatever you want with because it's your money. And at the end of the day, that's why you're investing so that you can make some money, right? Um, Whenever you take a trip, finance it with covered call money, with cash secured put money. What is wrong with that? There's absolutely nothing wrong with that. And that's what I've been doing for the past 5, 6 years is taking trips for free. I stay at high-end hotels. I go to high-end restaurants at those hotels. I take flights for very minimal money, if any money at all. And so that's what you want to do. You want to leverage your FICO scores and leverage your stocks so that you can pay maybe nothing out of pocket for your lifestyle. And that's what we're here. And to those that don't have that big a portfolio, there's nothing wrong with having 50 shares or 40 shares of a company and you're just brand new to this game. Absolutely nothing wrong. But have a mindset that your next paycheck, you're gonna put $20 in here, buy some shares, try to get to 100, and that's the goal. It's the first 100 shares are the magic key point here. All right. Once you're able to have 100 shares of a company, you're going to be able to sell your first covered call. And once you get that money, you'll realize that it is that simple. You literally say you bought SoFi at $6, right? Freak it. Right now, buy it at $8. Say you buy 100 shares, and basically you spent $800 on 100 shares, right? And then you sell a covered call for, I don't know, October, for $10. And right now, I don't know where, I haven't seen the options chain, but let's say you get $1 back. So you're basically paying $8. That's $800, right? For 100 shares of a stock, and you're gonna get $100 back automatically. So what is that doing? That's reducing your cost basis to $700. And then you're saying I'm gonna sell for $10, in a couple of months. And say you get taken out, right? And they give you $1,000. Well, what did you just do? You made $300. You made $300 on an $800 investment. What is wrong with that trade? Absolutely nothing. And that's the beauty of this game. That's the beauty of those that were able to, catch on to Uncle Bruce in the last few years, and have been part of, that community. And we're in the Discord together. You're able to see the trades kind of that we make. People talk about, perhaps trading at different price points, and they show you option chains. They show you charts. It's kind of cool when you know how to read those, because you're just it's another tool in your arsenal that helps you make money. And there's nothing wrong with that. You don't have to be that savvy though to sell a covered call. I promise you that. Depends on who your broker is. You could use Robinhood, Webull. You could use Charles Schwab, Fidelity. It's up to you, and your comfort level, as well as where you hold your money. I guess if you have savings with Fidelity or 401ks, and you guys want to take some money out of there, and kind of invest your own money, because you don't like the 2% or 1% return you're getting, and you want to be a lot more on hands with your retirement fund. I think that's wonderful. Some people that I know are actually doing that, and they're doing quite well. I've known people, that have started, with like penny stocks, and just buying 2 shares here, 3 shares here. Went to 100 shares of SoFi. Now they have like 400 shares, and they have a couple of hundred of other companies. And I mean, that's how it is. It's a think compound interest. That's like the eighth wonder of the world. That's what you're doing. You're compounding, your securities, and then just basically giving you more leverage, and you don't really see it day to day. But if you were to start trading, say, tomorrow, and you look back in 52 weeks, you're going to see that your portfolio, hopefully, if there's no crash, your portfolio has actually gone like this. Week to week, it fluctuates up and down, up and down, up and down. But when in doubt, zoom out, and you look back at the 52-week chart, you see the advance that you've made. Anyhow, thank you for watching me. Thank you. I wish you the best on this Sunday. And I'm looking forward to doing another one of these lives next Sunday, hopefully at the same time, 10 a.m. And I look forward to your comments and questions. You guys have a great day. And I'm the Current Savage. Like I said, it's all about making money with your investments and your own money. Don't let anyone make money with your money because I think that's just silly. And cash is king, but credit is power. And don't forget that. Goodbye.